next in order? All right, the court reporter has handed you Exhibit 8, which I believe is similar to what we looked at a portion of a prior exhibit, but this is the distribution calculations for 2017, correct?
Correct.
And would this be for the year 2017 or the year 2016 with a payment in 2017?
The year 2017.
Okay, so the payment would have been, we're looking back at exhibit, what was the one that had all the distributions on it? I don't think I grabbed the number.
Six.
So when you're looking at six.
Time out.
Yes. Yeah, there you go.
Sorry.
That's okay. So when you're looking at Exhibit 6, just so I'm clear, for the year 2017, when there was a distribution for North Yuba, that was paid in 2018, correct?
Correct.
All right.
Yes.
So going back to Exhibit 8,
And Exhibit 8. Just need to see what you're looking at again.
Yep.
I'm sorry.
8's the one that was just handed to you.
Oh, okay. Got it.
So do you know when the calculations were made that are reflected in Exhibit 8?
I do not recall, but let me explain or let me comment. Change in that position. Thank you for including the second page. Looks like per my notes, a preliminary calculation was done on June 25th. And then the final calculation was computed following receipt of the annual financial report.
That's why you have two different versions?
Two different numbers, I guess, is what
Yeah.
you're saying.
Which one is the preliminary, which one is the final?
Preliminary was the actual payment made, $1,393,000. The final is $0.
Okay, but let's go back to Exhibit 6. You'll see that there was indeed a distribution for $1,393,737.
Correct.
But you just told me the actual was 0.
Correct.
Misstates testimony.
I'm having a hard time following.
We'll give him an opportunity to explain.
Yeah, can you explain?
There was a preliminary calculation performed, it turns out June 25th, 2018, that resulted in a $1,393,000 distribution. When the final audit and financial report was received, that distribution should have been 0.
So you're saying the decision was made in 2018 to distribute based on the 2017 year on only a preliminary calculation?
Correct.
Had that been your practice in years prior as well?
Correct.
And had it occurred to you that you were making distributions that shouldn't have been made prior to 2017?
After this calculation, yes.
And is that why you went back and did the change in net position calculations for the years prior?
I can't say if that's exactly the reason, but it certainly makes sense.
So what changed between the preliminary and the final?
Probably recognition of those big ticket items, pension and OPEB expenses and liabilities.
But if you look at the change in net position, those numbers aren't changing, if at all, between the preliminary and the final.
Oh, correct, not too much. It's the recognition of the two adjustments.
You're talking about the loan payable and the increase in capital assets.
Correct, yeah.
So if you had calculated the final based on the way you did the preliminary, you would not have included the entire, well, what is that number? Strike that. You have a loan payable to PG&E reflected both in the preliminary and the final. Excuse me, only in the final, right?
Correct.
And why is that dollar amount $2,403,000, whereas in 2021 we're looking at like a $4 million number?
That was the loan payable at December 31st, 2017 to PG&E.
But wasn't there an $8 million payment to PG&E with the, I forget the name of the bank, but
The Signature Bank.
Signature Bank was $8 million in 2018.
Correct.
Why did the amount jump
Objection foundation.
between 17 and 18?
Same objection.
I can't recall the specifics of those transactions going back to those years, but there was, the final loan payable was dependent on completion of the Lost Creek Dam project.
So do you think there was more construction going on during that time?
Could have been more construction, could have been the final payments.
Okay. Because it was a construction loan, right?
Correct.
And when we said $30 to $40 million, but that was the amount that the loan was approved for, or that was the amount that we were carrying at the time? Actually obligated to pay?
That was the amount the loan was approved for.
Between 2010 and 2018, was there ever a zero balance on the PG&E loan?
Yes,
Meaning, as construction amounts were, construction costs were incurred, the loan was paid off?
correct.
And can you tell me, do you have records that show the balance of that loan at
They
any
weren't
given?
asked for. Oh, I'm sorry.
No, I'm just asking in general. Is there documents that you guys maintain, that South Feather maintains, that shows the snapshot daily balance of that loan at any given time from 2010 to 2018?
Yes. Yes.
Okay, so we could request those in the future, and you could provide those.
I reserved that one. Can't say we still have them readily available.
You did it sometime.
Correct.
Okay, but at least as of 2017, there was a loan balance of $2,403,000 and change at the end of that year.
Correct.
And prior to 2017, whether there had been a balance or not, you weren't factoring that in to whether an additional distribution should be made to North Yuba or South Feather out of the joint account.
In preparation for today's meeting, did not review those matters. If I can expound.
Well, let me stop you there actually and just say, whether you did it in preparation for today is not really my question. My question was back in 2011 and 12 and 13 and 16, it's true that you were not calculating the amount of any outstanding loan at that time you weren't factoring that in terms of calculating the distributions, correct?
I do not think that's a true statement.
So you think you did it sometimes.
Correct.
So why wasn't it consistently done throughout?
Objection foundation.
And that I can't recall. I'd have to look at the each year in question.
Can you recall looking at the amounts for 16 and 13 and 12 and 11, whether there was a PG&E loan on the books at the end of those years?
If I could have the freedom to look at,
You have as much freedom as you need here.
Exhibit 7, there is a little bit of a trail. For 2011, there's a line. For 2012, there's also a line with actually an amount.
But aren't,
2013, there's a line.
sorry, didn't mean to interrupt. Weren't these the after-the-fact calculations that were done, rather than calculations that were done as of the distributions?
Again, I can't recall the history of all of that.
Well, you told me that Exhibit 7 was something that was put together after the distributions were made, right? If I recall your testimony, Steve, it was that the accounting standards had changed and that you went back to see what impact applying the current change in accounting standards would have had on prior distributions. Isn't that correct?
Objection may misstate testimony.
And so the question again?
Yeah, Exhibit 7.
Okay, I'm sorry, I finally got to Exhibit 7.
Yeah, you told me you can't remember exactly when you did this, but the purpose of this was to go back and almost double-check the math for the distributions that had been done in prior years, correct?
Correct.
All right. So then the question I started with earlier was, forget Exhibit 7. Go back to 2011 and 2012 and 2013. When you made those distributions, when South Feather cut the check to North Yuba in 2013 for $2 million and change, it did not take into account any loan that was outstanding at the time with PG&E, right?
And I cannot recall the specifics of that calculation.
All right, but looking at Exhibit 7 doesn't help you because it's not reflective of the historical calculation that was done, right?
That it resulted in an actual payment, correct.
Right. Okay. So we don't know whether you were taking into account the loan payable at that time, 2012, 2013, or any of the prior years when a distribution was made, correct?
Correct, I cannot say that today.
Thank you. All right, so back to Exhibit 8. Tell me where the preliminary numbers are reflected and where the final numbers are reflected, just so we're all on the same page.
This is for the 2017 distribution.
Right?
Preliminary numbers are on the far right-hand column. My bad, not labeled column.
Okay.
The final, final calculation is in the middle columns, resulting in $0 distributed.
All right, and then what's the difference between page 1 and page 2?
The change in net position,
Do you know why they're different?
one was preliminary, one was final.
Which was the preliminary one and which is the final one?
$2,787,000 is preliminary amount, as noted in the second comment under note 3.
Okay. That's what I thought. I just wanted to get your confirmation on that. So the second page is the final calculation for 2017.
Correct.
And when was that done?
I don't have an exact date. It would be upon completion of the audited financial statement.
Do you know when the payment was made, the $2,787,474? When was that payment made?
I want to object. The 2017 distribution is not laid out in your topics, but you may answer.
I said historical and current distributions.
And I don't have a recollection of the exact date.
Okay, what I'm trying to figure out here, Steve, is that you tell me that sometime in 2018, just like in 2022, there was a final calculation done, and it shows there should not have been a payment.
Correct.
Was it your practice in years prior to 2022 to make the distribution before the financials were audited?
Before July 1st.
I'm sorry?
I think my practice at that time was to make a distribution before July 1st,
As required by the agreement.
as I understood the agreement.
Yeah, but we just looked at the Second Amendment earlier that changed it from April to July 1. So you would actually make the payment to North Yuba based on preliminary calculations before the audit was done.
Correct.
Why not have the audit done sooner?
Audit process takes what it takes.
Don't you think that's a problem, that almost $3 million went out that you are now showing shouldn't have gone?
What's the problem?
Did you ever,
It is a problem.
did you ever ask for the money back?
No?
Because South Feather got the same benefit, right?
Correct.
So it wasn't looking to return that money, was it?
Objection.
No.
The answer was no?
No.
Were any of the prior distributions before 2017 based on audited financials?
I can't recall.
You don't know one way or the other?
Nope.
And can you say for sure that the calculations we're looking at on the second page of Exhibit 8 was done in 2018? Or could this maybe have been done afterward as a retrospective exercise?
Objection calls for speculation, compound question, vague.
Could have been done at any point because the numbers didn't change. Numbers don't change after the audit financial report is issued. It's a static number.
Let me put this another way. Is the auditor telling you based on the 2017 financials, that you have to calculate the entire amount of the outstanding loan as of the end of that year in factoring in whether to do a distribution out of the joint account? Or
No.
is that a decision that's made internally? Go ahead.
Sorry. No, auditor would not make that communication.
All right. But you understood as of the date of your preliminary calculations what the loan payable to PG&E was at the end of the year, right?
Correct.
You didn't need the auditor to tell you that, did you?
Correct.
And likewise, you knew what the increase in capital assets was as of the end of the year, right?
That is subject to audit. We would want to use the audited financial
Okay, well,
report.
you at least had a general idea.
Probably.
Okay. I guess what I'm trying to get at is you had all the information available to you when you made your preliminary calculations and then cut a check based on that to have done it differently as you ultimately concluded when the final numbers came out, right?
Correct.
Can you give me any reason as to why you didn't do it on the preliminary basis the way you did it on the final, including the loan payable and the increase in capital assets?
That's getting a little confusing, but back in 2017 or 2018, I just forgot it.
Did you forget it in any other years?
Not to my recollection.
So the way that the calculations that were based on the way the check was cut were done differently in 2017 than they were done in 2020 for the 2021 year, correct?
Correct.
And do you believe they were done differently from 2022? Well, I'm going to keep confusing 2022 is when the check was cut, but 2021 year. So do you believe that the 2021 year, the distribution amount was calculated differently than every other prior year when there was a distribution?
And that would be correct.
Because those distributions didn't take into account the capital assets or the loan payable.
Can't say for sure.
But that's your understanding?
Probably.
Okay. That's about as definitive as you can get today?
Yeah.
All right. And who made the decision in 2017 to distribute that dollar amount to North Yuba and to South Feather?
Me.
And did anyone question the calculations as to why you didn't include capital assets or the loan payable?
No.
You don't think you were flip-flopping in years, like including it some and not including it in others, do you?
No.
So really what we're looking at is a change in your practice for the 2021 year of actually including the loan payable for the first time and calculating the amount of the distributions, correct?
No. The change in practice happened probably right after this calculation, or upon the realization of what this calculation did.
So you're saying if I looked at 2018 and 2019 and 2020, it would be different than 2017 and prior?
Correct.
And in fact, that's more in line with the position that North Yuba has taken in this case, that we should be distributing not based on the total amount of the loan as you had done historically, right?
Objection, argumentative.
Isn't that your understanding?
I don't know what North Yuba thinks.
Okay. Why did the change in net position fluctuate between your preliminary and your final numbers for 2017?
2017?
Back to Exhibit 8.
I can't respond to that. Just normal audit again, procedures going through the final numbers.
All right, back to the 2005 agreement, right there. If I can have you turn to page 24. And we're going to be looking at Part 4, Paragraph 3. I want to direct your attention to, I think, the second sentence of paragraph 3. And I'm just going to read this for the record. SFWPA also will provide to, and this is the predecessor of North Yuba, YCWD, each month a preliminary accounting of the SFPP joint facilities revenues and expenses, both as actually received and incurred, and as compared to the budgeted amounts. Do you see that?
Yes.
Since you have been employed by South Feather, those monthly accountings have never been provided to North Yuba. Isn't that correct?
Objection calls for legal conclusion.
They have not been provided in a separate mailed envelope to North Yuba.
Are you taking the position that what South Feather posts on its website in connection with its board meetings satisfies the requirement that I just read?
Yes.
Is there any written agreement between North Yuba and South Feather that you're aware of where North Yuba consented to receiving the monthly accountings in that fashion?
Objection calls for legal conclusion.
Not that I'm aware of.
Are you aware of any communications on behalf of North Yuba where it was communicated that North Yuba was okay with that practice being what you just described, compliance with the 2005 agreement?
No, nor was there any complaint.
That's not the question, though. I know you wanted to add that on, but I just want a clear record. You're not aware of anything that's been communicated from North Yuba where they've told you that that's an acceptable practice based on the monthly preliminary accounting requirements.
No, they never complained.
But you're not aware of anything in writing where they agreed to that, correct?
No, and nothing in writing.
Okay.
Calls for legal conclusion.
You understand that the agreement contemplates North Yuba having the opportunity to dispute,
Sorry, did you say contemplate what?
contemplates that North Yuba would have the opportunity to dispute certain revenues and expenses as compared to budgeted amounts, right? It's the next sentence.
Yes.
Where would North Yuba look to see what the budgeted amounts were for the SFPP?
In the annual budget and in the monthly financial reports provided.
And again, that's something that's posted on the website for South Feather?
Correct.
Anywhere else?
It may be available on the state controller report, not quite sure.
Why do you believe that South Feather is complying with paragraph 3 by posting on its website the same information that it provides to the public on a monthly
Objection.
basis?
Objection, calls for legal conclusion, speculation.
Can you repeat the question?
Yeah, you told me that posting the monthly reports on the website is complying with this paragraph. Why do you believe that that is compliant?
Same objection.
Because it's the same information that would be provided either way, to the public or to a private entity.
And you believe that gives North Yuba all the tools it needs to perform its functions under the 2005 agreement?
Same objection as to this in future questions.
Yes.
Are you aware that North Yuba has communicated in writing recently what it thinks should be the minimum information required by the monthly accountings?
Cannot recall.
You're not aware of a request from this office detailing, or from Mr. Maupin, detailing what North Yuba needs in order to perform its functions based on the monthly preliminary accountings?
Cannot recall the specifics of that communication.
We will come back to that. Next in order. All right, Steve, Exhibit 9 was just placed in front of you by the reporter. Can you tell me what this is?
This is the last page of the Joint Facilities Operating Fund financial report for the board meeting of July 26, 2022.
All right, does this reflect the final calculations for that year?
This is a 3 or 4 or 5 page report and does not reflect the final calculations.
Can you tell me why the $3,269,900 distribution is not reflected on this document?
Because that payment was made in July, the actual experience in the final column to the right is only through June 30th, 2022.
But it's not estimated anymore. Why is that?
Because that was 2021 actual activity.
I'm confused.
Excuse me, you're confused?
Yes. Can you help me understand why there's not an estimated payment as of this date when the payment hadn't yet been made?
Because the payment was made in 2022. The column you looked at is 2021.
Okay. Next in order. right, Exhibit 10 is a very similar document to Exhibit 9, but from the month earlier, correct?
Correct.
And if you look at this time, you've got an estimated payment to North Yuba for $5,374,000 as an estimated payment reflected in 2021, correct?
Correct.
The payment's still going to be made in 2022 at this point, right?
Correct.
And you're reflecting an amount as estimated for 2021, right?
Correct.
So what changed between June and July to zero that out, that same number?
The audited financial report was completed during that month, and it was determined that that obligation would not be reflected until the 2022 fiscal year.
Is there anything reflected here about what that dollar amount is going to be for 2022? Why is it not estimated at $5 million? Just moved over to 2022.
That was a timing in the accounting, again, our accounting reporting as to when we would recognize that expense.
Right, but I guess what I'm looking at now is it looks like that number just evaporated and went away altogether. It's not reflected anywhere here. Why not? Here on Exhibit 9 versus Exhibit 10.
Because the actual payment had not yet been made,
But it wasn't made in June either.
and it was still estimated.
Right. Until it's made, isn't it an estimated payment?
It's an estimate at that time as the amount that we would pay.
And maybe we're going around in circles, but it's still estimated as of July 26, 2022, right?
It's still estimated. We actually made the payment, just happened to be in July.
Right, and we can look at the check, which we started off with. July 27, 2022.
Correct.
Doesn't Exhibit 9 give the impression that there's going to be zero distributions in 2021?
That may be your interpretation.
Anyone looking at this, tell me where they would report, where it would reflect that there's going to be any distribution at all in Exhibit 9 for the 2021 year to North Yuba.
There would be included in the budget a $2 million disbursement.
How do you account from 1 month earlier, an estimated payment of $5,374,000 to now an estimated $2 million payment for the next year?
In the budget.
What did you say?
You said in budget.
In the budget, yeah. And again, that's just a shortcoming of my reporting.
Can you give any other explanation?
No?
Can you understand that someone reading this for the first time in a monthly board packet posted on the website might take the impression that there's no payment being made for 2021?
That could happen.
That might be pretty alarming, wouldn't it? When you go from 5 million being distributed down to zero.
Could be.
Do you have any other explanation for that?
Objection asked and answered.
No other.
Why did the amount go from $5,374,000 in June down to $3,269,900 just a month later?
Final calculation of the audit.
What did the audit reveal that you didn't have at your fingertips before?
Final assets, liabilities, revenues, and expenses.
Are you saying your projections were off by $4 million in the joint account?
Yes. Yeah.
Tell me specifically which inputs were incorrect based on your projections in June versus what the final audit communicated to you.
Again, that would be for the most part, in those pension and OPEB liability accounts.
Anything else?
Not that I could recall.
Is there a calculation that shows the difference between what was estimated as a greater than $10 million payment out of the joint account to the actual that was paid, which was 6 and change?
There's no reconciliation provided.
Is that a calculation that you maintain anywhere?
Nope.
Where would somebody in the public go to figure out where that $4+ million difference, where would someone in the public go to learn the difference of that $4 million, what it comprised?
They would, as it indicated in the annual financial report, any questions would come to me. The estimated amount was the amount budgeted. The actual amount is the actual amount.
And that $5 million figure that was estimated all the way up to June of 2022 was roughly the same amount that you thought was going to be distributed to each party back in December of 2021, right?
Correct.
Are the pension liabilities not available to you to review in January, February, or March of any given year?
Correct.
You only get them from the auditor?
We get them from CalPERS.
When do you get them?
It's a calculation that has to be performed, and it's performed in concurrence with, at the same time the audit is being worked on. It's one of the audit procedures, audit process, one of the items to be completed in the audit process.
So you literally have no idea how much that liability is going to be?
Literally.
And in years past, had you calculated the distribution amount based on just your anticipated or projected understanding of those liabilities?
What do you mean by years past?
Well, all the years before 2018, you said, when you kind of realized that it would be a better idea to wait until the financials were audited before making the distribution?
Yeah, unfortunately for both parties, the whole pension liability obligations became clear in that whole sequence in the 2010 through 2022 years. It's still being calculated. CalPERS was still getting through their procedures on coming up with assisting with that calculation.
Have you ever communicated to North Yuba, or has anyone from South Feather in any manner communicated to North Yuba that the July 1 date is problematic because you don't have the final information until sometime later based on the audit or what you're getting from CalPERS?
No.
And is there anything in the, I don't know the answer to this question, is there anything in the 2005 agreement that allows payment to be deferred until after an audit is done?
No, that's not specified.
So the change that was made in 2018 going forward to defer any payments from the joint account to both parties until after the audit was made by you alone, correct?
Correct.
Without consult with North Yuba?
Correct.
So the only thing that you can point to that reduced the anticipated payment by $2,104,000 from June to the actual check being cut was pension liabilities.
Objection to the state's testimony.
Is that correct?
The $5 million, you actually had it correct. That was just a carry forward from the budgeted amount that we adopted from the adopted 2021-22 budget.
Okay, but in any event, that's what you thought the distribution was going to be in December.
Correct.
And all I'm trying to establish is the dollar amount got decreased in terms of the share that North Yuba was going to get by over $2 million from December of 2021 until June of 2022, when that was assumed that all along that period, you're saying that it was going to be $5 million in that ballpark. The only thing you can point to that reduced that $5 million number down by over $2 million was the pension liabilities that were previously unknown. Is that correct?
Pension and OPEB liabilities.
Anything else?
Nothing to that degree.
Anything at all?
I'm sure there were others, but they're not anything close to those totals.
Like budget dust?
Like budget dust?
Yeah, like small numbers that don't really matter?
Right.
Okay. Next in order. Sorry. $11? All right. Steve, reporters handed you Exhibit 11. What are we looking at here?
Final page, final page, Joint Facilities Operating Fund Financial Report presented at the June 28th, 2022 meeting. Last page of that report. And then I guess the second page is the similar content except for the July 26th, 2022 board
Yeah,
meeting.
what I did is just for reference here, the second page is the same as Exhibit 9, is it not?
Second page. Yes.
Okay. So basically what I wanted you to do, and you have it in one spot, is to compare 11 to 9, and you've got them in one exhibit in 11. So in the June 28, 2022 report on Exhibit 11, there's a reserve for PG&E standby listed at $4 million. Do you see that?
Correct.
What is this line item for?
That is an ongoing discussion currently happening with PG&E with regards to standby charges for our power plant operations in prior years.
All right, and then, as if you were explaining to a teenager here, what does that mean? Is that PG&E wants money from you?
You said it.
Okay.
Your words.
And it's for prior years?
Correct.
Which years?
I can't say, I don't know.
Okay, and what is the justification for why they think they're owed money for prior years?
And again, that's not my area, I'm afraid.
Who told you that there's a potential $4 million liability to PG&E?
General manager.
All right, and do you know what the resolution of that issue is?
I know that that the issue has not been resolved.
Okay, well then let me just ask, it's reflected in the June report, but it's not on the July report.
Correct.
Why is that?
Again, this is a discussion reviewing what the obligations are as of December 31st, 2021. At the beginning, as we're going through the audit process, it was conceivable that this was an obligation that should be recognized. As the year went on, when the final audit was completed, it was determined that this was indeed not an obligation in 2021 that should be recognized.
Who made that determination?
It's a combination of myself and the auditor.
And specifically, who on behalf of the auditor? Who's the individual you're talking about?
The senior auditor,
What's his name?
Jonathan
Do you have a last name?
Abadesco,
She's going to ask for a spelling.
and I can't spell it.
Okay. So did Jonathan tell you that he didn't think this was something that needed to be realized for 2021?
I certainly don't have any written correspondence to that effect. We may have had I assume we had a discussion on it.
Well, this is within the last 2 months, right? I mean, month and a half. We're talking about from June 28, the June 28 board meeting till 1 month later, July 26, which is less than a month ago. Somewhere between that time frame, there was a decision made that this $4 million didn't need to be recognized, right? For
Correct.
2021.
Correct. Yeah.
Do you recall anything that Jonathan or anybody on behalf of the auditor specifically said regarding that issue?
Cannot recall any specific discussions.
How about generally? Were they generally in favor of saying you don't need to recognize it for 2021?
Objection to this line of questioning beyond the scope of the notice that you may answer as to your memory.
Yeah. And again, can't recall any, certainly not date and time, any discussions along those lines.
I was just asking generally, not date and time.
Yeah. Yeah, I think we probably did, but again, it's hazy, so I can't recall. Yeah. Hazy.
Do you have any notes that would reflect any conversations you had with the auditor about this issue?
No.
Do you recall your thought process changing on the issue as to whether it needed to be captured for 2001, 2021, or not?
My thought process, let's go as far as we can. If we get resolution, then we ought to report it. But at some point where there's no resolution, then we're undetermined at that point.
So it's not clear whether that's owed or not,
Correct.
and it's not clear if it's owed for what years or in what amounts.
Correct.
It's an ongoing discussion.
Correct.
And does South Feather have any correspondence with PG&E on this issue?
I'm not aware.
How was this brought to South Feather's attention that there might be a $4 million liability to PG&E for this issue?
Yeah, that whole discussion would have to happen with the general manager.
Right. Is there anything more you can tell me about this $4 million estimate that showed up in the June board meeting packet but was not there on the July packet?
Nope.
Want to break for lunch here?
Sure.
All right, off the record.
Going off the record, the time is 12:19.
Oh, good time.
Going on the record, the time is 1:24 p.m.
All right, Mr. Wong, we're back from lunch. I just want to remind you that you do remain under oath. Do you understand that?
Yes.
Okay. Does the auditors have any information that you don't already have available?
Objection vague.
Do the auditors have any information that I do not have available? Is that the question?
Yes.
And the information they have available for South Feather Water and Power Agency is from me,
Right.
or from our office. They would be more knowledgeable of governmental accounting principles and standards than I would be.
But the information that they're looking at to do their analysis is all provided by you.
Correct.
Right. So for instance, you don't need the auditors to provide you with any of the pension figures or any of those numbers, right?
Correct.
And you have a contract related to these pension liabilities, right? South Feather does?
A contract, are you asking a contract with who?
We talked about the big items. There was two different types of pension, essentially, liabilities. Those are all based on contracts between South Feather and these agencies, right?
Between South Feather and its employees.
Sure, right. So I guess what I'm trying to get at, it's not an open-ended deal where at the end of the year, the pension personnel or pension people just tell you, here's what we think the dollar amount is. This is calculatable based on how you've contracted with the employees, correct?
Yes, it's a calculation that is made by an actuarial.
Right, but you have the tools available to you throughout the year to make those calculations, right?
No,
Why not?
because I'm not an actuary.
Okay, but you have access to an actuary if you needed one, right?
I guess we could contract for an actuary to perform those calculations more often.
Sure, that's all I'm getting at. Okay. Next in order, please. Do you have a paper clip? Or do you mind if they're stapled? Do you mind if they're stapled? Okay. All right, this is Exhibit 12 that the reporters handed you. It is a May 26, 2022 letter from Jeff Maupin on behalf of North Yuba Water District to Mr. Mosley. Have you seen this before?
Yes, I have seen it.
Okay. The first question I have for you, well, let me just lay a little groundwork here. This is a letter that Mr. Maupin wrote to Mr. Mosley in response to an invitation from Mr. Mosley, who basically said, you guys keep complaining you're not getting this monthly accountings. Tell us what you even want, because you haven't done that before. That was his statement, so I'm paraphrasing. And so this was what we provided in response, Mr. Maupin did. The question I have for you is, if you could go through the document request list and just tell me, not whether you think it's helpful or anything, what's the difficulty it would take on your end to prepare this information?
This document request list.
Yeah. So there's a list of documents that North Yuba is saying it wants on a monthly basis. And I just want your honest assessment as to how much time it would take for you to put this information together on a monthly basis.
Give me a second
Take your time.
read through this, please.
Objection beyond the scope of the notice, but you may answer as to your memory.
For what it's worth, I've tried that before. I think what the PMQ designations put up the minimum requirements that you need. I don't believe there's a basis to exclude if you go a little bit beyond that or even a lot beyond that. I think the issue is we may not have somebody who's actually qualified to talk on that.
Understood, yeah.
So I just want to give you my response to that. I don't think that's a basis to exclude, but.
Thank you for your patience there as
Sure.
I went through that. And the question, how much time and effort would be required
Exactly.
to respond?
Yes.
In the case, for the first half of the items would be half a day. Guess that's really the first bullet point. Sorry, the first bullet point,
You're talking about the detailed accounting,
provided detailed accounting, yeah.
and then there's things that it includes, which are the 4 bullet points.
Right,
You'd say
so getting through those 4 bullet points would take half a day.
of your time.
My time, and conceivably other staff time, yeah.
Is that something you could delegate to somebody to do?
After the format was agreed to and made sense, probably.
So when you say half a day, would that be sort of putting it together in a format that makes sense for the first time?
Clearly for the first time.
Right.
Yeah.
But what I think you're envisioning is that it would probably get more efficient as time goes on if this was done on a monthly basis, right?
That's true. That's the general progression.
Okay. How about the remaining bullet points?
The remaining bullet points are more of annual, not versus monthly calculations.
No, but I want you to assume this was being done on a monthly basis.
The detailed budget,
Oh, I get it. I'm with you on that. So maybe that's done on an annual basis, providing the budget.
correct. And if North Yuba would like me to regurgitate that every month, I guess we could do that.
You're envisioning that that wouldn't change, right? Once you set the budget for the year, it is the budget.
Correct.
Unless something catastrophic happens and you need to redo the budget.
Correct, yes.
Okay. All right. So what about the accounting of all the net revenues?
Net revenues, again, are done once a year, as we've talked about.
I understand that that's the way it's done now, but I'm asking you to envision complying with this request and providing this on a monthly basis. How long and what would the effort be?
Objection calls for speculation.
2 months,
It would take 2 months to provide an accounting of all net revenues paid to South Feather and North Yuba and how the payment amounts were determined?
it's the same thing, we're going through the annual financial report, which takes obviously too long, according to North Yuba, so.
Why do you say it takes too long?
I've heard you complain.
I was only talking about the difference between what the contract requires and when the check was cut.
Understand?
Was there anything else you were referring to?
No,
Okay. And providing an accounting of the overhead expenses allocated to the SFPP joint facilities, including the underlying calculation spreadsheets used to determine the monthly allocation. What's the effort there?
2 hours.
And again, is that something that would get more efficient over time? If it
No.
was- Okay. And is that something you could designate to staff to do?
Yes.
Provide any analyses prepared for or by management for the SFPP joint facilities, including a schedule of maintenance and revenue and expense trending. What's the effort there?
4 hours.
Is that something that would get more efficient over time?
No,
And is that something you could delegate to staff?
no.
Could you provide read-only remote access to the SFPP joint facilities accounting system?
Can't comment on that one.
Is it functional? Could you do that?
I believe we can, but that's not my area.
Would that be IT?
Correct.
You understand the idea of read-only though, right?
Correct.
That would mean someone can access it at any time but not make any changes, correct?
Correct.
So do you have any, if it was doable from an IT standpoint, do you have any heartburn if North Yuba had that access?
Objection.
From an IT standpoint, what did you say?
Do you have any heartburn if North Yuba had that access?
Objection calls for speculation.
I had no objection.
All right. Have you inquired with South Feather's IT personnel as to whether that would be doable?
Cannot recall if we had that discussion. or
Would you
not.
have that discussion?
Are you asking me to do it in the future?
Would you be willing to do that?
Yes,
Since you said you had no problem with
Right,
them
right.
having that access.
sure.
Okay, I would appreciate that, thank you. Any other time estimates that we haven't covered here, or effort estimates beyond what you've discussed that would require on South Feather's part in order to comply with this list?
Not that I can think of right now.
Okay. Do you think any of the requests that are made here are unreasonable?
Yes.
What's unreasonable about it?
Oops, I'm sorry.
No, go ahead.
Depends on the extent of the backup support requested for revenue and expense allocations. The language is sample, but it could be overbearing.
Sure. Want you to assume some facts here in a hypothetical situation that you were actually entertaining this request. Is it, what am I hearing you say, that you would have maybe some pushback or some suggestions on about how it would be more efficient to go about getting some of the information?
Be happy to have that discussion.
Okay, so rather than a complete pushback on some of these things, you would be willing to at least have a discussion about how we could streamline things and be more efficient and still provide information that North Yuba believes is important to get.
I would, subject to general manager and board of director direction.
Okay, but at least from your perspective as the finance manager of the entity, you'd be willing to have that discussion.
I work at the pleasure, general manager.
I understand, but I'm just looking at your own testimony. You're fine having that dialogue, right?
I am, to the extent I have authorization.
I appreciate that, and that's as far as I'll push you on that one. We talked a little bit about the PG&E loan earlier in the deposition today,
Yes.
how it was originally a construction loan. Was PG&E the lender?
Correct.
Okay, and then at some point the balance needed to get paid off. There was like a balloon payment, and that's when Signature Bank, that's where that loan came in, right?
Correct.
And the only reason for that loan was to pay off what was owed to PG&E, correct?
Per our contractual obligations with PG&E, correct.
So at the time, there was reserve amounts greater than the $8 million obligation to PG&E, correct?
That's going back a ways.
2018.
Well, I think there was, but
Okay.
cannot say what that number was. No.
Well, we talked about the contract says minimum $15 million,
Yeah.
right? And then that number has gone up over the years, right?
So correct. There's at least that amount in there, for sure. I can attest to that.
Okay, and then the reserve's never been underfunded since you've been employed by South Feather, has it?
Not after the first year or after the second year. Yeah, the first year was still underfunded, but
Fair enough. So from 2010, let's just take that year, 2 years after you've started there, from 2010 to the present, whatever the reserve balance is, South Feather has maintained at least that amount, correct?
from 2012
Okay,
on.
great. So in 2018 then, by process of elimination here, there was sufficient funds in the reserve to pay off the PG&E obligation if the decision was made to do that.
Correct.
But instead, South Feather made the decision to acquire a loan and keep the reserves untouched, correct?
Correct.
Who made that decision?
Not a decision taken lightly. I'm sure there were discussions between myself, general manager, and the board of directors.
Did you personally ever consider just using the reserves to pay that balance off?
That was always an option.
What was the pros and cons of doing that?
Decreasing our available cash balance with an uncertain revenue future, uncertainty in the revenue, in the future of our revenues.
Anything more specific than that?
No? Well, excuse me. Uncertainty also in the expenses. We had still trying to get a handle on what expenses, potential expenses were out there.
What is the purpose of the reserve balance?
I can't say. It was in the agreement.
Do you have any understanding as the finance manager for South Feather what the purpose of the reserve balance is?
Would have to review that. see if the agreement said anything specific, but for unforeseen, unanticipated drops, decreases in revenues, unexpended or unexplained or unanticipated increase in expenditures.
Prior to me asking you that question, had you ever contemplated what the reserve balance was for?
Objection, relevance.
Go ahead.
10 years ago, 10, 12 years ago, I'm sure I read through that.
Has South Feather ever used the reserve balance?
Not the joint facilities operation fund.
Can you envision any, do you have an understanding of what circumstances would need to happen before South Feather would make the decision to use the JFOF reserve?
If for some reason our power plants were shut down and we were not able to generate power, which would not generate revenue,
Who would make the decision to use reserve balances?
Objection to line of questioning calls for speculation. Go ahead.
correct? Would have to speculate, but would not be made alone. It would be made in consultation with general manager and board of directors
Of South Feather?
of South Feather, I'm sorry, yes.
That's not something that where you would consult, where South Feather would consult with North Yuba about, is it?
I don't know.
What is the South Feather Water Power and Agency Financing Corporation?
That was the corporation established 1995 in order to issue debt. In that case, it was for the water treatment plant. In response to, and I'm not an expert in this area, but in response to Proposition 13, restrictions and regulations with regards to public entities issuing public debt.
Is that entity still in formation today?
Yes.
Does it do any business?
It is currently responsible for our Miners Ranch treatment plant certificates of participation.
That sounds very important.
Well, if you drink the water.
So tell me a little bit more about what it does. What is its daily business?
Well, I'm not sure it's relevant to this. It's minimal daily business. It was, again, created so that we could issue debt within for the agency. In this case, it's tied to the treatment plant.
Do you handle the finances for this corporation?
Yes,
What kind of revenue does it bring in on an annual basis?
none.
Has it ever brought in revenue?
It's a vehicle to account for bond issuance and therefore bond proceeds,
Okay.
and then the payment of that debt.
Do you know who the directors are of that company?
The same directors as the agency.
And what about the officers? Would those be the same as well?
They don't have to be, but they are.
So you maintain the books and records for that company?
I do. They are incorporated into the books and records of the agency.
So if I was looking through the final report, is there anything about the financing corporation in here?
Yes.
Can you tell me where I would find that? I don't need page and lines, but is it just like, is there a heading for it?
Introduction that says included in the in this report is the financial activity of the corporation.
And if I wanted to get records related to that corporation, the books and records, that's something I could send to South Feather and they maintain those?
Yes, an annual report is prepared each January as well.
Okay. Is there anything else about the business of this financing corporation that you can tell me other than what you testified so far?
Again, not really relevant to joint facilities, at least not to my knowledge, and I don't think anything else, no.
I guess that's a good question. Is there any connection financially between the financing corporation and the joint facilities or the JFOF?
Not at this time.
Has there ever been?
No, and my hesitation goes back to when it was first formed and debt issued on behalf of the agency for power division, power purposes, but nothing relevant in the last 10 to 12 years. So.
Do we know who the caller is on the Zoom?
It's Caitlin Poyer from Crow. I'm sorry, my internet went down, so I dialed in.
Got it. Thank
you.
you. I saw you looking at that. I was wondering what you were seeing. Next in order. What number? All right, Mr. Wong, we've looked at similar documents before, the June and July board meeting kind of overviews, but these are some separate highlighting. What I want to do is ask you about the roughly $5 million beginning balance increase that's reflected in the second page as compared to the first page. Do you see that?
Got it.
What's the reason for that increase?
Yeah, that's my number that I adjust as necessary to reach the 2021 ending balance to reconcile to the audit and annual financial report, excuse me.
Walk me through your process here for how you get to that calculation and the conclusion.
Understand. This report tracks revenues and expenses for the Joint Facilities Operating Fund. The attempt here is to make sure the ending balances tie and reconcile to the audited final, or the most current and relevant audited financial report. So as necessary, I will adjust the 2021 ending balance and pull that forward, excuse me, to the beginning balance on the spreadsheet, so that all the history and current year displayed on this, those numbers are correct and current.
The beginning balance that's reflected on June 28, 2022 of 18 million and change there, was that based on an audit from the 2019 year?
Correct, in order to get to the 2020 actual ending balance.
So how is it that that's changing 2 years later?
Because of the activity in 2021, which doesn't reflect in the revenues and expenses per this, this working document.
Is this what you referred to earlier as a prior period adjustment?
It would not be recorded as a prior period adjustment because, again, these are work papers and spreadsheets available for management, myself and general manager, for making decisions with regards to future expenses, really. And we also recognize future revenues, but it's really to help us work through revenues and expenses in the current year and the future years.
Did any auditor approve this change?
No,
Who authorized the change?
me,
Who made the calculation?
me.
And what was the impact of this change?
Objection vague.
Practically speaking, it's information only.
Makes no difference anywhere?
Provides the board and general manager with a general idea of what our what our balances available are.
Does the change in the beginning balance for 2019 by roughly $5 billion have any bearing whatsoever on the amount of funds that are available for distribution out of the JFOF?
No,
Does it have any impact whatsoever on any distributions of any year?
no.
So both of these figures are listed under 2019 actual. Can you help me understand how the actual can change when it's not estimated?
Understand. And it's just a determination that I've made, and I've changed the number. And even though the July 26 report is titled estimated, it's still, while it's still not final, it's closer to being the final number as will be picked up in the audit.
Is it typical for you to go back to prior years and make changes to the actual beginning balance?
It has been it is consistent with my practice over the past years.
And do you understand that to be within allowable accounting standards to do that?
This is not an accounting standard. This document is a management tool for projecting revenues and expenses.
So if we could summarize sort of plain English, what you're saying is you had more available in 2019 than you thought you did?
That would not be correct, and that would be my fault for not putting the numbers correctly through this process. But that would be a net of the changes over those 3 years, 2019, 2020, and 2021, as a result of audit adjustments that happened throughout the year.
All right, if I'm on your board, how am I using this information, this $5 million swing? What does that tell me?
I would focus you on the current year, 2021 and 2022, for your budget versus actual in terms of any decisions that need to be made.
So I should just ignore the change in 2019?
Yes.
So on Exhibit 13 on the front page, what does the ending balance reflect?
Well, there's 1, 2, 3, 4, 5 ending balances.
Sure, there's one under 2019 actual, 2020 actual, 2021 estimated, 2022 budget, and then 2022 actual through 5/31. So if there's different answers for different categories, let me know, but I'm trying to figure out what those numbers represent.
It's the, if I could use the 2020 column, that would be the ending balance available in cash, available for future expenses. So the ending balance becomes the beginning balance of the next year. So, and that ties to the audited financial report.
All right.
The other ending balances for 2021, 2022 budget, 2022 actual are just numbers that calculate through after we do all of the revenues and expenses that are demonstrated on the first 4 pages of this report.
So if you turn to the second page, you look in 2021, as of July 26th, the day before the check was cut to North Yuba, you've got an estimated ending balance of $36,838,728.
Correct.
So let's just do some math, rough math. The contingency reserve requirement for 2021 was 18,783,662. That sound right? We can go back and look at that if you want.
Yeah, is that right? I have a note that plus the working capital reserve should come up to
There we
20.
go. Go ahead. You have a note that says what?
On the July 26 schedule,
Yes.
that notes the working capital reserve of $1,004,000 and some change, plus the $18.7 million contingency reserve, for a total of $20.2 million.
Next in order. So I'm gonna, this exhibit
I got
14 has as its first page the same document you were looking at as the second page of the last exhibit. And highlighted is in fact that note that you were just reading, okay? Which reflects that when you put those two numbers together, you come up with a total reserve of $20,200,232, right?
Correct.
Right. And then the second page is actually a document that we've prepared that simply takes the ending balance reflected on the first page, the 36 million figure, deducts the required reserve balance that we agreed upon, and leaves a number of $16,638,496. You see that?
Correct. Yes. You highlighted it for us.
We did, yes. Do you agree that that is the amount that should have been distributed to North Yuba and South Feather?
No,
Why not?
because that number is a working capital, is a working number designed for management and board of directors to make analysis and determination on future revenues and expenses.
So I can't take that figure listed there at face value? The 36,
Objection's vague.
36 million.
Not for purposes of determining a net revenue distribution.
So how do you get to the real number then?
Go through an annual audit. No,
I mean, you literally have no idea until you go through that audit?
correct?
You can't, isn't the $36 million an estimate of what you think it should be?
No. Not for purposes of net revenue distribution.
Tell me all the purposes that number is used for.
Objection, that's your number.
The 36 million.
It's a picture of funds available for purchases.
What purchases?
For capital projects, for daily operations and maintenance.
So it's money that can be spent,
Correct.
but it's not money that you can use to calculate distributable amounts.
Correct.
How are those not the same?
That's the whole accounting world we're in. It's unfortunate, or fortunate.
Is your method of calculating the distributable income in any given year, is that based on anything that's set forth in the 2005 agreement? Or is it rather what you understand to be the right approach to get to that number?
Well, obviously, it's the right. My interpretation would be what I would consider the right approach, using change in net position as the defining start for net revenue.
Right, but we also identified that it wasn't until roughly 2018 that you were using the change in net position method for determining distributions, correct?
Correct.
Sorry, change that position.
For determining distributions.
That would be correct.
All right. And that was a change that you made on your own because you thought it was a better approach?
Correct.
Back to the first page of 14. There are references in the top left portion of this spreadsheet to transfers in and transfers out. You see those?
I do.
What are those?
If we could take the last few years first, there's a transfer to the general fund for the minimum annual payment required to, that's shared. The same amount also went to North Yuba. The overhead distribution is a repayment from the Joint Facilities Operating Fund for general fund expenses, their share of those general fund expenses, administration and IT departments. So those are the numbers in the last three columns. There was a transfer in from the Power Division Legacy Fund. That was the leftover funds from our agreement with PG&E after projects were all completed. And there's also a contribution from the Retiree Benefit Trust Fund at the recommendation of our auditors for monies we had set aside in reserve for retiree benefits.
Next. So Exhibit 15. All right, if you can take a look at the highlighted numbers on the first page and then compare them to the highlighted number on the second page. And the question I have is, why don't these numbers match?
Can I have a second here? So I think I might have it in a detail report.
Can we go off the record?
Sure.
That is 205.